This week, the markets were heavily affected by the Federal Reserve, as they are every time the Federal Reserve takes any action at all. What makes this week unique was that there was a ton of hope in the markets at the beginning of the week that the Federal Reserve would reverse course, that it would pivot its position, that we would not see a hike in interest rates that would come with a corresponding reduction in prices. If you have been paying attention to the markets for the last few days, you will know that that is not what happened. The Federal Reserve did raise interest rates, not by as much as they have in the past, but they continue to raise interest rates. They continue to stay their course of keeping interest rates high, to keep inflation rates low. And the markets continue to suffer, and we have been suffering underneath this for the past 3 days. The markets are red. I'm not worried at all, but these Federal Reserve announcements, these actions that the Federal Reserve is taking, continue to affect the market and continue to lead to a poor macro environment. There really aren't a ton of other stories coming out this week. The Federal Reserve kind of dominated everything. It was predictable. I had some puts that I had bought at the beginning of the week and that I sold towards the end of the week. So even in bear markets, it's possible to make money if you do it right. But the ways you make money in bear markets are more risky than the ways you make money in bull markets. So my advice, not financial advice, but what I'm going to do going forward is just buy limited amounts of puts, sell those puts, make a tidy profit week after week as I continue to hold the positions that I do hold, and maybe add on to those positions, get the stocks at a deal, and prepare for the next bull run. There's been a lot of sentiment on Twitter, a lot of sentiment that I'm hearing from people in my network that the Fed isn't going to raise or isn't going to lower interest rates until 2024. And I think if I were a betting man, that I would have to agree. I would have to be on their side. The Federal Reserve is not a very risk-prone institution. Things they do are very conservative, very proven. They do not take very many risky tacks through the markets, nor do they have to. But I think that lowering interest rates, really pivoting, really starting to reverse policy before interest rates come down appreciably. I mean, we're at 7.1%. That CPI data was released earlier in the week before Jerome Powell came out and said what he said about the interest rates. And the inflation rate is down from the peak over the summer, but it's still not in a good place. Still 7.1% year over year. Prices are up across the board, 7.1% from where they were this time last year. They are up, particularly in consumer products, energy, food. And I don't think that the Federal Reserve wants to take a chance by lowering the interest rate, that inflation could stay where it is. It's got to get down, and so I understand what they're doing. But it's a pretty sucky time to be a long-term investor. Um, Even as it's a good time to find deals and to find companies that you like and want to invest in the market, it's a pretty sucky time to be to just wake up and be looking at your portfolio and be looking at the stocks you hold. It's not great, but we'll get through it. Thanks for tuning in. Till next time, I'm Shabby Shambles. Take care.